Yo, what is up, everybody? Morning. It is Monday, and I don't think the market has a case of Mondays. My voice is still kind of gone, so apologies for that. Give everybody a minute just to hop in. Man, what a weekend, dude! What's up with the Nvidia? I thought for a minute we were gonna get a little bounce, but she's probably just gonna chill for a little bit. But hey, it happens. Did you guys know, by the way, that PDD was a short? Check that timeline. Yeah, true story. True story. Let's see what you guys got going on. Okay, what's up with the comments? Paper currently on wait list. Yes. Anything I do to speed up the process? Ooh, no, Angel. There's not a whole lot that you can do if you are on the wait list to join the Discord. All good. We're running a course of School of Gains right now. So what we do is we open up kind of like once a quarter, and so that's so everybody's on the same page for the School of Gains essentially. But we will welcome you when the time is right. So just hang tight. It'll be worth the wait. I promise. But in the meantime, hang on and hang out with us in the live streams. We'll trade when we can on Spaces and on YouTube. And yeah, it's all good, man. It's all good. We got a lot of stuff on deck. Side note, last week we did get NFP, so welcome. We're gonna do a little bit of non-farm payroll breakdown. If you don't know what that is, we do this kind of. We get this number once a month, and it is the most important number of the month every month. What's up, Frankie? I feel fine. I get the sick, if you will, like once every few years. Sorry. But it sounds gross, but it doesn't feel bad. It's kind of like, I don't know, what is it, like bronchitis, something? I don't know. But all good. It's all good. I'll get over it, but it takes a while. So it is what it is. And I text Sharky this morning. I was like, where you at, man? He's like, I'm not trading today. So he's okay. I did a welfare check on Sharky. Don't worry, everybody. He's all right. He's just taking the day off. So all good. So anyways, if you're new, welcome. We do this every Monday. So every Monday, I trade for a living, and the idea is to make money. And so what I do here is try to help you guys make a little bit of money too. And we kind of go through, just like if you're in the corporate world, every Monday, you kind of jump in, you have like probably some kind of all hands meeting where everybody gets together and you go over maybe some wins from the last week, what's important, what's coming up. That's important things to note, things that you should be aware of. Frankie, tequila. Oh God. Hilarious. No, if I drank maybe, but I don't. I'll put this chat overlay for. I know it's too big. And I got some good stuff for you this week for sure. We have some major market moving events, or at least some major trading things to trade around this week that you may not be aware of. So it's an important one. I think it's gonna be one that if you miss this week, you're probably gonna shoot yourself in the foot and be like, damn, I wish I would have tuned into Paper Stream. And if you did catch it and you make some money off what we send out on these things, especially this week or any other ones, guys, give us some love, share it, right? Give us some props out there on social. Appreciate all of that for sure. If you caught some of our trades, man, we mentioned some things, maybe in some spaces. I'll go over some of those trades today that are starting to pan out. I think we got some major breakouts, believe it or not, major breakouts in the market right now. Sharky had tequila. Oh man, that's too funny. Anyways, so let's without further ado, let's get into it. All right, so last week, couple headlines to note. NYCB, if you don't know, falls more than 70% off, and then gets a cash infusion and rallies like 30%, and so does the KRE, or the regional bank index. Interesting, right? Weird. Also notable headlines: Apple iPhone China sales plunged 24% down. Apple with the trifecta of the brutal headlines back to back. Just not fun. It is kind of for a lot of the large cap stuff right now, and you'll see this in kind of like the Mag 7. The end of February into March is typically, it's a seasonal slow period. So from end of February to end of March, give or take, we're usually flat to down a couple points, and that's exactly kind of what we're seeing. So that is normal. It's a normal kind of market lull, if you will. And but don't forget, it's an election year. And if you didn't catch, way down here in some of the comments, or oops, God, geez, I hate when that happens. Down here, if you didn't catch Biden's, I think it was last Friday, State of the Union or something, he goes, I betcha rates are coming down. Yeah, that was wild, right? But anyways, just don't forget, right? We're in an election year. It's coming. And yeah, well, some things might be down right now. They'll probably stay down for a little bit. That's okay. You don't need to rush into things. Let them kind of like chill out and base. And then when they start to really catch ground, then hammer it, right? Apple will be a buy. Tesla will be a buy, right? Microsoft, Meta, they're all kind of, Microsoft, Meta, by the way, they're super strong, right? Google, eventually, sure, maybe a buy. But all those things, they're all going to be good, but maybe not right now. Right. That's all I'm saying. Other than that, there is some stuff to note that's notable in some of the headlines that we got, numbers that we got last week. So the layoffs, we got the JOLTS numbers. Layoffs surged to the highest level in 15 years. So the jobless rate, highest rate in 2 years. So why is that notable? Actually notable because if unemployment goes up and layoffs are starting to go higher, it's kind of reason to drop interest rates, right? So help a little bit for the business from the business perspective, right? ECB. So ECB is like European Central Bank. They did have their meeting. They're hinting at a June rate cut, which is actually about what we're forecasting in our at the CBOE Fed Watch tool is also hinting at a June rate cut as well. Powell's testimony, the Henry Hawkins, Frankie's favorite thing. Henry Hawkins is the annual kind of testimony. Powell goes in front of the House and the Senate. Kind of quick recaps there. Generally speaking, aside from all the politicking, he's saying he wants to see more evidence that prices are actually cooling off. For us regular folk, it doesn't really feel like things are actually coming down. It really doesn't. Excuse me. And the caution is, if you lower rates too quickly, then you're just going to lose the battle against inflation. So, are they likely to significantly change the plan? Or no, sorry. And then also questions about stuff like NYCB, Silicon Valley Bank. They are likely to significantly change the plan to require large lenders to hold more capital. I think that was in terms of some of the financial institutions, things like that. But net, he did say he's not far from having enough confidence needed to cut rates. So data dependent. Let's see what it says, right? When we did get the numbers out on Friday, the non-farm payroll numbers, the initial reaction, price reaction, was to the upside. And in addition to the non-farm payroll numbers, we also got the staple revisions, which we've been getting back to back, right? And so what I would say right now is that I would just be very cautious and patient in terms of taking a read on the market trajectory, if you will, right? I think that the market is very much expecting that this good headline NFP number is going to get revised down, right? I think it's like, I can't remember how many, but pretty much all of the recent NFP numbers have been revised down significantly. Every single one that was a beat has been revised down. But at the same time, the market's still grinding higher overall. It's been choppy, but it's definitely grinding higher. So, that said, I think it's still it's a good thing. I'll show you guys how we trade around the NFP levels. I think everything's, as far as my plan goes, everything stays the same. But it's just going to be something that I want to be a little bit more patient around for right now. So Typically, when we do get the number, the price action the following week, i.e., this week, is actually sometimes super choppy or just kind of like a lull. So I'm not really trying to trade a whole lot right now. So Sharky can take the day off. You guys take the week off, whatever. I want to have some very specific catalysts to trade around, which we will have. And I want to have some very clean price action to trade around. So unless I'm catalyst driven, or like just an epic chart that I just cannot ignore, I don't really want to be super invested in it, right? And so I do have both of those things for you guys this week. So number one, ARM IPO lockup period ends tomorrow. So after an IPO goes out, 6 months later, an IPO, 6 months after an IPO is released, the lockup ends. Did you guys know that SoftBank owns 90% of the outstanding shares of ARM? So what's going to happen tomorrow? We don't know. We'll let the price action tell us. If you haven't taken a look at these ARM options, they're through the roof in terms of pricing. I think that it's actually justified. There's a ton of flow on some really low, like low strike price options. I would not be surprised to see that thing fall off a cliff. Just saying. So if you're ARM shareholder, it's probably worth some insurance right now. But from a day trading perspective, or even maybe a swing trading perspective, definitely in the pre-market tomorrow, we want to watch ARM shares for sure. The lockup ends tomorrow, 3/12. That's going to be a big mover. Also to note, so we have an NVIDIA AI event is on March 18th. So that's the actual keynote. So this week heading into it, last week we had the kind of run up. I'm not sure if that was the run up into the AI event or not. So we'll see what that looks like. I know that as we were closing in on 1,000, we got to about 975, about 975. We tagged it to the penny almost and dropped off like a cliff on NVIDIA. But March 18th is not this week. It's actually next Monday. So next Monday, we can see probably in the back half of this week, you might see a pretty big move heading into that event for sure. Let's see, I entered into ARM earlier with your put? I'm pretty sure for some reason I was down a good bit, even though the price was lower. I think that's volatility. So right now for sure. Oh, yeah, I didn't even look at it. So I'm looking at it's all IV. So it's kind of chopping around. The contracts are super juiced right now. So I mean, I'm trading, just really looking at the price action right now. I'm not really worried about it. This one, I'm probably gonna swing just a little. I think honestly, I as long as this is below 130. Well, anything below 130 on ARM right now, that was that yesterday's low. It's a lower high, and we're heading downside intraday at least. So I'm just looking at lower high from a price action perspective. So if it does continue to break down to the downside, we should see another pop in that IV. But yeah, I'm not worried about that one for sure. So anyways, those are the two things right now. I have some charts for sure. If you were in some of the trades, then one of those charts that is just like an absolute banger setup, that I'm just like, I took a flyer on. I'm like, I took two trades this morning. One was NEM, which is a gold miner. I'm gonna go over some of these charts. I think gold, God, I've talked about gold on and off for years, but if you pull up a monthly chart of gold, and we will later on, I'm just so hard pressed to find a better looking chart in the market, period. Right? Like, you just cannot find a better looking chart at all. But anyways, that said, let's just move forward just a little bit, right? So I did take a look. So after the testimony, Powell's testimony, and Henry Hawkins, et cetera, so we did move up just slightly to a 55%. So the market is currently pricing in 55% probability of a rate hike in June for the market, right? Last week, in terms of data, So data, we did get a couple data points last week. We got ISM services coming in 52 on consensus 53, pretty much in line. So here's the jolts, just slightly lower. Economic optimism, this was kind of notable, coming in slightly lower, 43.5 on a 45.2 consensus. And then here are the non-farm payroll numbers. Essentially 275 against the 200K consensus. Significant beat once again. Does the market, do we get a revision lower? Probably. But again, still probably going to be grinding a little bit higher, right? Unemployment rate 3.9. Here is that jump up, right? So slightly higher here, but and average hourly earnings slightly lower than consensus. So once you dug into it a little bit, it's like, okay, it's okay. Right? It's not great. It's just okay. So now we really just want to see how does the price, does the market accept where we are from a price perspective, right? And that's what our NFP levels are all about. Moving forward this week, right? Just to get some of the data points out of the way. Today we did get the 3-year note auction. Tomorrow is the big day of the week, right? So tomorrow we actually get CPI. That's the big kind of like pivot point. Angel, what's up, man? Yeah. Oh, everyone, wait list. Absolutely, guys. Sign up. We're gonna be releasing newsletter too, also. So stay tuned for that as well. So for everybody that's on the wait list, we will have newsletters and things. So we'll have stuff for you guys in the meantime. 3-year note auction we got today. Tomorrow is the big pivot for the market, right? We get CPI. That is the actual inflation data point, right? That the market looks at. Wednesday is pretty much a nothing burger day. So we have two things on Wednesday. We have an oil status report, which also one of those really good looking charts. We're going to look at some oil companies, right? Believe it or not, some of these oil companies are, looking really good. And then we have a 30-year bond auction. So remember, market's still not about inflation so much, but all about the rate story, right? So the 30-year bond auction, that's a long bond. I say long bond. It's the longest bond out there, but that we have, that could tell a little bit of a story, right? PPI we have on Thursday. So normally PPI is not a major market moving event. But recently, it has been holding a lot more weight in the market as more investors have been getting a little bit more savvy, right? So if you're not familiar, CPI stands for core price index, right? Or consumer price index, right? PPI stands for producer price index, right? And so producer prices are like your producers, right? They produce goods for the consumers. And so the PPI number technically flows down to the consumer number. So this flows down into this number. So this is actually a little bit more forward looking. And the market's kind of gotten onto that. And so the market has recently tended to pay more attention to PPI. Now I'll say this in terms of where should you really pay attention to these economic data points? What's actually, important and blah, blah, blah. It's all a lot of fundamental nonsense, for most people. It's number one, non-farm payrolls. It's number two, PCE. It's neither one of these. Then it's PPI and then it's CPI for me, right? That's how I hold those, right? Everything else is that's the order of operations for me. So PPI should hold a little bit more weight, but the market does react strongly on CPI, typically stronger than PPI. And then Friday, we get consumer sentiment, which can be like an intraday kind of price mover. There's some coal charts. Whoa, Chris, coal charts. All right. I forgot you're gonna have to throw a cold ticker out there. I haven't looked at one in a while. I forgot there was one. Was it Peabody? God, I don't remember what coal ticker I used to look at. Did I go to this? Yeah, we did. All right. So quick earnings review. We've gone through this last week. We pretty much only have one major Dow 30 component to go, and that's Nike, who, by the way, did catch an upgrade. I threw this chart out in the group. It was just like I didn't realize they had caught an upgrade already. But this one, over 100. This one was looking like it was ready for like a pre-earnings run. They did catch an upgrade today. Sorry, I'm looking at the chart off to the side. And sure enough, yeah, they got it. So anyways, they did catch an upgrade today. Just back over 100. Nike sub that one looked like it was ready for a little bit of a run into earnings, but I'm not sure after an upgrade that was probably just a little too fast for most to catch. You'd probably want to have that one pull back just a little bit and see if it can stabilize around 100. But that whole process might take a little bit too long, to be fair. All right. So I want to do one thing really quick and check in with our friend, Miss Cleo, before we get into the charts. So let's go ahead and hit that. And let me just give her a quick call, see if she's available for us really quick. All right, guys. So Miss Cleo has sent over, what do we call this? Miss Cleo has sent over her reading, right? And when I first got this, this is a theme card called the Star, and I was like, oh, this kind of looks pretty good. And then she gets a card for every day of the week, right? I'm gonna go through this pretty quick because I do want to get to some charts. But so theme card for the week is called the Star, and then we have the 10 of what's called the Wands, and we have this really weird. I don't really know what's going on. So there's the Devil, and then the Lovers, but the Lovers are with the Devil in here where they're kind of like chained up. And then there's a 3 of Wands. What's this called? And then this is the 5 of Coins, but these guys look like they're out in the cold. So anyways, theme card is healing. It's time for healing and restoration, which says we may be suffering from some weakness and needing to take a break, which, yeah, a lot of stuff is kind of gappy down. Makes kind of sense, right? Stars positive long term, but bearish short term. There'll be time for hope and optimism, but we must first pause and restore balance. So then we go into the daily cards. So today's, so last 3 Mondays, 3, 7, and then 10. What she's talking about is the 10 of Wands. So it's 3 was Monday. The last Monday was a 7. This Monday is a 10, which means that we are 10 says we must endure one more battle, but the worst is behind us. This could finish. This could finish whatever move we've been setting up for the past few weeks. So we'll see. Or it could continue with a Royal or Major Arcana follow-up. Well, I don't know. Tuesday is the Devil. So I was so it's positive historically, which is weird to me, but could suggest a small bear trap. This would fulfill both meanings of the card. However, I am only bullish on a gap up. If we open flat, we're probably going to chop. Basically, she's saying go with the trend. If we open red, it would be negative. So that makes sense, CPI, right? So whatever trend happens on Monday, if we gap, it would probably, she's saying gap and go. And if it's a flat, she's saying just walk away, right? Wednesday, interesting. First, the Devil binds the Lovers, then sets them free. This is regression in both numbers in terms of energy. Okay, look for a bit of mean reversion here. So don't swing into Wednesday. If Tuesday bounced, then Wednesday likely gives it away. Meanwhile, if Tuesday is volatile, then Lovers escape in order to, unless Tuesday is flat, then you can swing, whatever, play the opposite direction of Tuesday. Then we get, was that Wednesday? Yeah. And then Thursday, 3 of Wands is a 3, which means low energy, but also says, what was Thursday? Do we have? Thursday's PPI. Thursday, but it also says expect rapid expansion. Okay, so this is possibly a 3s. We're beginning of something. So I don't know. I would check her read here. Probably moving in the opposite direction. Prominent energy thus far. I think that this lines up with possible reversion of Tuesday on Thursday with PPI. Could be setting up for a double move, but the star says we fade in order to fly. So the lovers serve as a pivot at the weekly low. Okay. Interesting how she lines all this stuff up. I don't know how that works out. The only way that this bearish to me is if we've spent the week flirting with the range highs. Okay. Friday, 5 of Pentacles, suffering, feeling left out in the cold. Bad news is we're going through tough times. Good news is that we have help available. This could usually bring negativity. Negativity was a small rally at the end of the day. Also almost always finishes negative. So Friday is a fade. What I find difficult to interpret is if we move from 3 to 5, so that's Thursday, 3, Friday, 5. If Friday is red, it should come from continuation of Thursday's weakness. But Thursday is supposed to be positive. This means that I need to reassess midweek, which I will do via chat. Okay. So that brings us to the charts. Let's do that. Here we go. If I can get this over here. So this is how I start the day with this view right here. So SPY, use diamonds, IWM, right? And everything here. And then I have, I have the 10-year yield, TNX. Right now I'm watching crude, CL crude futures, and I'm watching gold futures, GC. On my charts, and if you don't have this, excuse me, you should do this right now. Go through your charts and mark Friday's high and Friday's low, intraday high and intraday low. This is your NFP high and low. Okay, that's what we want to see. On my chart, this orange box here, this is an average week's range. Right now, if we cannot get back above Friday's high, an average week's range to the downside is going to land us right at 500. Right at 500 for the full week. But for right now, what I'm looking at, so for me, for a trend, I want to see a full day open and close below 511.14, which is Friday's low. Right now, we've opened below, but I can tell pretty quickly that we're going to be contesting with this low, and we're probably going to be closing above, right? And so to me, what I'll be looking at essentially is just kind of like this chop right now, and probably coming into call it 514 for the week, and retesting this kind of like halfback, right? So I say halfback, meaning like retracing this range, and then after that, believe it or not, probably retracing right back to here, and then doing it again until we get to like, well, actually to Tuesday, which may give us a big move one way or the other. Hit a full week's range. Let me delete. If it's to the downside, 504. If it's to the upside, it would be all the way back up, maybe even extend. Wow, 522 is what I would say. Upside, and then probably chop in for a bit. But for now, until we have like multiple days opening and closing above or below either 518, call it 50, or below 511 even, I don't really want to have a directional bias at all in the market. So for now, I would say stay neutral, right? Because this could really go either way. And as long as we're in between Friday's range, the market is very much neutral, and it can stay neutral for a significant period of time. And I'll just go back. This is last month's NFP day, right? This is how this works. So we're neutral as long as you're inside the channels, right? And again, how does this work? This is that Friday NFP day. We kind of just half back right here, chopped around 2 days, basically 50% mark, and then finally started to open above. This was the third day. We actually, in the pre-market, got all the way up, opened above, and then went, and then came back, retested it all the way again, went up again, retested the top, and then this is all post and pre. You weren't able to get this, but all this stuff, every time you came into that was a long. And then I'll look at some others. This is again, right here. These end up being a lot of times the high or the low for the entire month, right? This is January NFP day. So this end up being right here. Sorry. the low for the month, 464 of January, right? And even the high of that day ends up being a major pivot. This is December, the low of the month, and the right here. That's your pivot. Boom. You get this mark. Hopefully, you guys can see this. You might not. This might be a little bit small, but this is how important these levels are. If you don't know, I've talked about this to death. So today, right now, Q's very similar to SPY, right? We don't want to be, really taking major flyers one way or the other. Diamonds have actually extended. They're already inside Friday's range. So diamonds, I took the pre-market level where the market got the data. So diamonds are already inside the range. They're already inside February's or retesting February's NFP high, looking to extend to the upside just slightly, right? But again, be very cautious. IWM already back inside. This one looks the best to me, the cleanest. Our February NFP data is until like way down here. So in terms of charts, I will say that IWM still by far and away looks the best by a long shot, right? So already reclaiming Friday's low. We'll see. It's early. It's just barely a BTU. Yeah, BTU, that was Peabody. Just barely like one day after, right? The one thing that was kind of cautionary to me was just this Dixie pop really quick ahead of, and then again, I think that's just ahead of CPI. But guys, the 10-year yield 4.2 was a major pivot. If you didn't know, there was like $750 million that went out in about 5 minutes on this Vanguard BND total bond market ETF on Friday. And I caught that and I was like, whoa, that's a lot of flow in about 5 minutes. But yeah, $750 million just went out. And this is a bond ETF. So long bond. So buying the bond is being short the yield, if you didn't know that. So big bets going out left and right, short yields, so that basically saying that the yields are going to go down. So that said, let's get into a couple trades. So I know if you guys have some tickers, we'll take a look at a couple things. You guys are already, yeah. So gun is NEM calls to 40. Yeah. So some of the first things I was looking at. Okay, so I have that, but NEM. What I'm going to do first is I'm going to pull up this gold chart. Actually, I'm going to pull up gold futures just to be real for just a minute. And I'm going to pull up a monthly chart. And you guys just take a quick look. I'm going to take off all the drawings and just take a minute. And I'm just going to leave this chart here. And you tell me if you can find a better looking chart in the market. You cannot. This is a monthly chart, right? This is a monthly chart of gold futures. So this level here goes all the way back to 2011. This little top here goes all the way back to 2020, right? And this monthly candle is extending beyond here, February or December 2023. And so if I drop down to the weekly, we have a weekly open over, right? I drop down to the daily. I mean, this looks really good. Even if gold, like for whatever reason, tanks, I just can't see any way that gold isn't a buy on every single dip, like on every single dip, on any dip, or just in general. I just that's just me, right? No, it's not just me, right? Like, and so like the scenarios are, right? So if the yield is going down, there's two things here. Number one, China's thing about they were going to be giving, and so exordium, your note about JD. So JD.com, I'm not even going to look at the chart. I'm going to say no to JD because so the JD China they had a lot of headlines about going and saying, oh, we're going to release a bunch of stimulus. Well, the moral of that story, the end result of that was that China's they figured out that they cannot stimulate their economy enough. They just cannot do it. And so what did they do? I'll tell you what they did. They went out and they bought tons and tons and tons of gold, right? And so the gold market's not that big, guys. But they bought a bunch of gold. And there's another piece of the story is that if our yields are going to go down, right? Then all of a sudden there's a real rates. It's called real rates, right? The real rates are going down, meaning like if inflation, if the yield is lower than inflation, so like if the yield does come down and it's lower than inflation, it no longer makes sense to hold bonds for yield. And if it no longer makes sense to hold bonds for yield, what do you want to hold? You want to hold gold. And so that's going on. And at the same time, right, if the dollar is coming down, which, by the way, you tell me, is the dollar coming down? Yeah. Dollar's at least not going up, right? Dollar to me looks like it's coming down. If the dollar's coming down, that is good for equities, but it's really good for gold. So we have all of these things kind of going on in our favor, right? So I think gold, it's not to be a gold bug, all those things, real rates, right? China not being able to stimulate their economy as much, having to pour into gold bullion. Yeah. And so to your question, C. White, I do like a couple things. So Chris, you're in our group. So you're already in. NEM is the one trade that I took today. It's an investment. It's also a quick trade because it was a breakout. So they reported earnings. This is the largest component of GDX, right? To your question, it's the largest component of GDX. They beat earnings. Stock went slightly down, but when you looked at their report, the thing about it was, what did they do? They cut their dividend, and they also, let me pull up my write-up. So they cut their dividend, and their announcement was that the model, they're going to change the whole business model, right? Number one, they netted 23% growth. They're going to sell $2 billion of non-core assets. They issued a $1 billion buyback, which is not that big, mind you, over the next 24 months. And they're going to limit CapEx to 1.3 billion, which they're going to limit their spending. They're going to, they're already growing 23% year over year. They're going to buy back shares, and they're basically going to, and they're cutting their dividend. So they're changing from this old dividend play, no growth, and they're basically changing into a growth model. Like what? So the thing about gold miners, like they've been stuck in this nasty rut for so long, and so like to me, I was looking at this like, okay, NEM, GDX, all the above. It was a great spot right here. Anything under 30, and this chart goes way, way, way back, right? All of this, it was a good spot. And I was looking at this with gold hitting all-time highs. As long as the equity market is just okay. So if the equity market dumps, miners are going to have a hard time. Let's be fair, right? So that's the risk, right? If the equity market dumps, gold miners are not going to really participate. Gold itself probably will, but miners will not. But as long as that's okay, NEM, somebody like NEM is going to have a huge, huge, huge upside. And this, honestly, guys, might be like GE 2.0. And I said GE at like $50. Who knows? Just a 50% retrace from here to here puts you at 67 or 60%, $67. It's $35 right now. That's a double. Just saying, right? Just saying. And it still has a dividend, right? So the dividend is still, what's the dividend on this thing? I don't know. It was 10% div yield. It's not that much. At four now, okay, so 4.7% div yield, whatever. You don't buy this for the dividend anymore. But it's turned into a growth story. So I guess, one, we wanted to see the dividend investors exit stage left. Now we really do want to see if the management team can really do a turnaround story. But the thing was, like, look, this is a clean reversal now. It's just a clean reversal. And it was post earnings. So earnings shares actually dumped on good news, but it didn't go down that much. It went down 1-2 days. And then I was like, okay, we sent the buy. And then it was instant, like, whoosh. And I was like, oh, okay. And it just continued on. So so whoever was talking about $40 calls, yeah. But your timing, who knows, right? To me, I would be more comfortable playing this with the short-term breakout and or equity. So just keep that in mind. Trying to time it is tough. Did I play junior? Do you play junior miners? Yeah. So AGI is your junior miner. Look at the chart. AGI. There's your junior miner. 1350. Right? That's where you want to be. Second chart. If gold continues, you guys know what happens next. I don't know. Hasn't gone through, but market's not really super long gold yet, but it's definitely breaking out. And I'm telling you, you cannot find a better chart than gold. And if it does go, you know what goes next, and that's silver. Silver is getting a little bit of a bid. It is not broken out yet. Over $23. Silver is rolling, and when she goes fast. So side note. So GDX, we'll take a look. So this is GDX here. I had some short dated calls in our server. We actually rolled those out. So the ones that I'd rolled out to like May are going to be fine. The short dated ones, if you're in March calls, you do want to take those sooner than later because you don't have a lot of time left. But everything is actually looking perfectly fine. A couple of you guys are asking about some large cap names, so we'll go ahead and get into them. I'm going to tell you that right now that I just said, if you're looking for the dip buys, it's going to be later for maybe some of those. I think it's going to be later for some of those larger cap ones. I think that the focus should be on like gold miners this week. Stay focused on ARM for possibly some movement tomorrow. Maybe not today. I'll swing this small anyways, just based on like the lockup expiration. NVIDIA, I think back half of the week, right? So typically, here's NVIDIA. So a big drawdown, right? And so usually when you have a big move like that, what is going to happen is that you chop around a little bit. So right now, what I'll say is it's not extending unless you're really below 850, or I would actually give it some like a little bit more grace. And I'd say if unless you're below 840, or what's this right here? That's a little too much. So you have these essentially where the buyer stepping in. So this is a 30-minute chart, and you can see it pretty well. Like this is pre-market. They stepped in right here. Intraday, they stepped in right here. And right off the open, they stepped in right here at 840, just about 840 on NVIDIA. So this is your level that you don't want to see break right now. This is where they're stepping in. If it chops around, it's probably where you want to like look to see if they're picking it up again. If you're locking in higher lows, so a higher low would be about 850 right now. I would not necessarily expect a big reversal on this guy just yet, right? Typically, after a big move like that, you have to take a bit of a breather. And so that's why I'm saying back half of the week, right? So back half, probably Thursday, Wednesday, Thursday, Friday, one of those days, right? And Friday, NVIDIA this is a Friday move. So it could be one of those days where I'm just going to do this. If I Alt I, if Friday, NVIDIA has like this little liquidity grab here, and then all of a sudden, if you have your pre-market levels, if this was, sorry, I just inversed the chart. If Friday, NVIDIA gaps down quickly and then recovers pre-market low on Friday, it's going to be boom, hammer long, and it could be a 3,000% trade on a Friday. So I would keep an eye on NVIDIA for something like this on maybe even a Friday. But for right now, let me put this chart back. I would expect this to chop around up to probably like 920, give or take. Here's that volume shelf right here. So unless it's over 880, 890, if it's over 890, she goes straight to 917. If you can't see that, I'll show you. I'll just zoom in real quick. Here are these volume shelves right here. So today's opening range, essentially. So over today's opening range, 887, then she goes straight to 923. That's going to look like this. Basically, that's it for this week's trade. If you get that trigger, but you don't have it right now. So right now it's a no touch. Just leave her alone. Let her be, because that's a big move. Volatility just needs to cool off, right? And conversely, if you want to take a short trade, it's going to be something like this, down, and there is this target. Here's this volume shelf. So here's your volume shelf here. It's going to be something like this. You have a gap to 820. So target one. Stay open-minded, right? Either way. To 820. So below 840, you got $20 drop. And then you got to 793. Another drop right there to that volume shelf. Cool. But wait for it. Right now, you don't want to touch it. I did buy some NVDX, side note, but I'm not trading options. And that's just for a little bit of a blip to the upside for that bounce. But I wouldn't, options, I would be too worried about decay and that kind of stuff for me. So I'm going to set an alert on these guys for either one. Okay. GDX, IWM. So IWM, I think, we went through IWM. As long as this is closing over, I think IWM, I would give it a bigger leash. But as long as IWM is closing the week over 204, I'm very happy with that. She can chop around a little bit. But I still think you could kind of load this. If you are like someone that's in TNA, I think you could still, so down here, I think you could actually sell puts if TNA comes down to like 39. Then I would sell some more like 15 delta short dated puts if you see TNA take a nosedive to about 39, but not before. Okay, so BTU. Yeah, BTU is Peabody. That's the coal miner. You're right. Ooh, so yeah. So BTU took, they're right up on a major level. So I got to get that. I don't want this one right now. That one. I want to wait for that to be over that 27 level, or like pull back to 25. NVIDIA, Google, Brandon's asking about Google. Let me do a quick time check. Yeah, we're okay. So Google, here's the thing about Google. I think Google can retrace, maybe. Ooh. Tough. Here's why this is tough. So you're right, coming up to the top of a channel. I would not be long Google here. To be fair, I hate to say that. So Google might be a short soon Ooh, or like right now, we, I let it get up. So here's this. So connect these highs. The thing about Google, myself included, I've owned Google since like $90. Um, and they had this problem where it's like, oh, they got to they had the Bard issue, which was like really where I was first buying them around $90, and then this most recent Gemini release, and then pullback. And it's like, okay, guys, you've done this how many times? So second time that you're gonna flop on Bard / Gemini, fool me twice. That I think is the market like rhetoric right now. And so they're stuck in a prove me wrong kind of scenario right now. So I think Google is going to be challenged in the near term. So I don't think Google goes anywhere. I don't think, and I feel like Google's more at risk of really falling off a cliff. I say cliff, right? So like to 123. That's where I would probably be more inclined to pick it up. Um, truth be told, and this is like right around here is where I was buying it. I would say like, yeah, like 120 would be your pullback on Google, and I would probably be picking it up there, and that would be on the third headline of some kind of Gemini fail, right? And that's likely what would happen. Technically, they're running into some resistance literally right now, like literally right now. So I would not be going long Google here, trying to trade for this breakout. No, if I did do something like this, honestly, this is more of a short. What you do on these situations, you wait for it to break and then come back and retest the top of that broken trend line, and then you go long. And even if this were to break out, to be fair, if you're in the group, even if this breaks out, you could just a little bit, and then it goes to here. This is a short in 145 to 138, and then it'll stutter step, and then maybe it can be a long, right? But this is a short here. If you do get that breakout, and that's probably where I'm going to sell the rest of my Google, to be fair. But that's what it's going to look like. That's that fair value gap to probably about 143 right there. Because honestly, if that does happen, if you do get that gap up and you get that little stutter step and then boom, you could be looking at the rest of this move just like that. How many times have you seen that? How many times have you seen that kind of price action? More often than not. Just like that. It looks like that. And then boom, you're all the way back down. Sorry to bring that one up. Okay. So I saw Microsoft. So Microsoft, same situation. Microsoft is not really, so I don't know. Okay, Angel, Microsoft call, before CPI. So that's totally dependent on your, I can't recommend anything because I don't know enough about your sizing or position, like expiration or any of that kind of stuff. What I could say is, so this is a perfect example. Here's this downtrend, right? When you see that little breakout and then top, and then what happens a lot is you get this boof all the way back down. So that's why that first breakout, typically not on actual long, because you usually get a lot of this, and you don't really want to go long when it looks like it's breaking out of that little downtrend. You usually want to go long somewhere closer to this, right? Like 398s. And so if you get that, but then you want to be taking it here. So for right now, what I'd say is Microsoft was a long over here, right? And we went through this in our group like just a little bit ago. Like this was the long Microsoft, like 320, when it looked like it was going over here, but that was target acquired up here as well, from 320 to 420. So I think, this what's true is that Microsoft is in a consolidation. Does it break down? I don't know. I don't think so. But if it does, then that would be one I would probably be looking to buy on a dip rather than anything else. A real dip would be closer to like 380. Like a real dip is down into this liquidity zone, 373. That's a real dip, right? That's a real dip right in here. See this volume shelf right here? That's a real dip. That's a real nice dip. That's where I'd really want to get long. Otherwise, these are kind of like small pot shots. I said pot shots. And it's a small volume shelf. It's not a lot of defensive levels, but it is building a base. I will say that. So Microsoft is building a short-term, near-term base right around that 400 level, but they're grabbing it like nibbling whenever it dips below 400. So that's how you'd have to trade it. When it dips below 400, they're kind of nibbling at it right into this level here. See that? That's when they're kind of nibbling at it. So if it really dips, great. Otherwise, you could just kind of like pick at it. Cool. Hopefully that helps. Third sun divergence. Yes. So I think that I'm not a big fan of miners. So this is about like, so okay, so I do like, so from a miner perspective, I like CleanSpark. But I'm not a big fan of miners here into the halvening, right? Because so like once Bitcoin does do the halvening, then miners are they're just gonna be able to sell half the amount of Bitcoin. So I'm not a big fan of miners. I'm not. I will say, what am I a big fan of right now? I'm a big fan of the Grayscale Ethereum Trust, guys. I'm not a big fan of like GBTC, although I obviously that's going higher. There's no question, but I'm a huge fan of the Grayscale Ethereum Trust. I think you have a ton of upside still here. You don't think that there's an Ethereum like ETF coming? You're crazy. You're crazy. And side note, $35, right? Ethereum is over $4,000 right now. Yeah, over 4,000. What is that? 35? You have a discount, right? You have like a 30, I don't know what that percentage is. You have a discount, like 15, 20% discount on Ethereum Grayscale Trust over Ethereum itself. If I were to pick anything, I would pick ETHE, even though I'm up double on my ETHE position. You're not so late that there's nothing left to the upside here. That's like, if you were asking me, am I too late to the party on GE? Yeah, you bet your ass you're too late. Sorry. Yeah, like, no, I think GE, you're too late, right? We're done on GE. Side note, right? We're done. I think that could be a short, to be fair. But there's another split coming, but I don't think that goes anywhere anytime soon. But it's not, I think Ethereum has a lot of room. Auction coming in on the market. Ooh, my bad. Did that move the market? So that was a 3-year. Sorry. I got sidetracked. Yeah. So this is all this stuff. Look, if we got the auction, is it magic that happens right at that Friday low? Not really, right? TLT going higher. Yeah. 100, no, right? 100, no, Austin, right? It's 98, right? It's not 100. It's 98. It's just barely, right? So 93 was the first target. You're just going here, 98. You're going to get here, right here, and you're going to stop. That's where you're going to stop. So if you want to sell, cover calls, like if you want to do a buy right on TLT, if you know what a buy right is, yeah, go for it. I would buy if you got a bunch of cash to park, buy shares of TLT, sell $100 cover calls for like 2 months out. By all means, I think that's a solid no brainer call, right? But no, not over 100 soon. And what do I think about NQ? All right. So I do QQQ. So QQQ. So we were just talking about, so when I talk about large caps, I'm mostly talking about QQQ. And so I think, right now we're going to get the first short signal if we close below Friday's lows, because we did open below Friday's lows. So where Qs should go is 430, right? On QQQ. You guys got to do your analysis, what that is on NQ. But that's probably like you got this giant volume shelf here, 1800, give or take, is your nice clean number. And that might happen on a CPI day. 430 is not a huge drop, to be honest, but you should tag 430 on the Qs, not this whole thing. If you break 430 on the Qs, you will. So this is how these levels work. So you trade level to level, right? If you cannot get over 438.34, you will go boom to 430. If you lose 430, you will go quickly to 422. And these are these zones that the Qs or whoever will move through very quickly. And then once they get there, you stop, right? You stop, the trade is over, and it's all good. All brokers are bad at getting filled contracts and trying to take profits, and it won't fill at ask price, says high fill likelihood. Donut, are you in the server, Donut? You got to do something called middling the markets. If you don't know what middling the markets are, so just if this is like, impromptu training, let's say this line is your bid and ask right here. So the bid, bid ask, you don't go all the way through. This is where you want to get executed. You actually put it right there. Right there. That's where you set your order. I think that's a lot of people throw their order all the way over here or even over here and rest it or try to buy down here. If you want to get executed fast, it's 80% of the direction through, not all the way over here. Don't rest it here, like right here. And if you want to get executed fast to the buy, it's right here. Sell right there. Cool. That's called middling the market. Hopefully that helped. Quick and dirty. Hit pretty well. I was just looking. Oh yeah. Yeah, look, arm. I think that's so. I think we were just talking about that arm. Yeah, this is what I'm talking about. So arm on 130. This is yesterday's low, pre-market's lows. I think she's just locking in a lower high. Anybody checked on my Ruru? This is just starting, guys. This is just start. I'm not taking this. Oh, Ruru. You guys know this is short, right? I'm not closing this either. We'll see. All right. It's all 12.5 million for 440 QQQ puts. Yeah. I mean, that makes sense. That's like right here, like right as they're rejecting Friday's low, right? Look what happens. Is that a coincidence? I think not. It's not a coincidence because these are fundamental events here these days that create our technical levels. All right. I think I'm good, you guys. We've gone a little bit over. I've had fun. We got some questions out. Best charts of the month. Don't forget gold. Does gold care what everything else is doing right now? Hell no. Hell no. It doesn't, right? So any dip, it's a buy. Gold options, by the way, These just rip, right? GDX, that's just going. If you like leverage ETF, GDXU is the 3x leverage GDX. I do like this as well. I do not like options on leveraged ETFs. I do think you can just buy this ETF though. I will probably go on Wolfie's thing tonight and say GDXU, AGU. No. What's my 3x leverage gold? Guys, somebody help me. AGQ. Oh, AGQ is silver. Oh, I haven't had that one in a while. Shiny. Oh God. So I'm really ooh. It's a new one. This is new microsectors. Ooh, you could try it. I'm always very hesitant to go with these guys that don't have a lot of volume behind them. Hard to get liquidity out. But anyways, that was yeah. UGL. There you go. Yeah, UGL. There you go. Is tried and true. Yes, yes. Right. More volume, right? UGL is not. Oh yeah. Oh yeah. That's juiced. So 1.5x is ProShares Ultra. ProShares Ultra is 1.5x. Look at that. JV goes with the Nugget. Yeah, Nugget 1.5x. Yeah, I do like GDXU. That works. Nugget is I think Nugget is 2x. GDXU is 3x. UGL. I would go with UGL technically on a dip. GDXJ. GDXJ is not leveraged. If you want to go leverage JNUG, there you go. For the 2x leverage, is way less volume. Yeah, it does. So there's a difference. So just side note, GDXU is the miners. UGL is gold itself, right? They're both leveraged, but one is the miners, which are the stocks, and one is gold itself. So remember, they're two different things. If stocks don't do well and the market kind of comes down, the miners will also come down. But gold itself is going to do its own thing. That's going to be more tied to the bond yields and the dollar right now. So that's why I was kind of going with the UGL. So junior miners. Yeah, this JNUG is junior miners leverage. But my new Discord name is JNUG. All right, guys. Holy shit. We got 1,100 people on the stream. You guys rock. But it's been real. I think we got enough here. Look, I'm not going over what I'm saying this week is, guys, we're not talking about Microsoft necessarily. I'm not talking about Google. I'm not talking about your regular stuff. I'm talking about some things that are probably off the beaten path a little bit. One chart I wanted to get to, Exxon. Guys, tell me that doesn't look juiced, right? Like that could be a good one right here, right? So right now we're running up into some overhead supply. Wednesday, we get our oil status report. Keep this one on watch. It's a nice little setup here. It's still going. This is a daily chart. There's small moves. You got earnings coming in end of April. Small continuations here, but look at this, right? Right now, this was a big 105 was a big old breakout, and then you have this huge volume shelf right there that we're finally creeping over. Once it gets over this level, right, which it's just doing today, it tends to start flying pretty quickly, right? So look at this. Here's the level right here. Usually, whenever it gets over this level, we get this boom, 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 right? And you either way, boom, 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 down 1, 2, 3. We get a lot of it gets real wild up over 108. So just keep these guys on watch. We'll back test the level. Do I think Exxon will back test? No. That's what I'm saying. I don't know. I think this is going to be a Wednesday watch. It could just go, right? The Winter Soldier. Oh man. The Winter Soldier, dude. The Winter Soldier is no longer the Winter Soldier. It's just Bucky. So no, we went over the Winter Soldier. I think, no, put that one on the back burner for now. She's coming in. She's coming in hot, right? She's coming in for a landing. She's coming into 150, maybe a little bit lower. But she's got to take a break. She's coming back in for entry. She's not going up anytime soon. She's not. She's got to fill this gap. That's about 150. So I'm sorry, man. Go watch last week's show, and I give a little blurb about that one. But yeah, she broke my heart. She broke my heart. He broke my, I don't know, Winter Soldier. His name is Bucky. We no longer call him the Winter Soldier. But, all right, guys. I love you all. It's been real. And I will see you on the next one. Adios. I'm going to hop in with some Jordy and the crew over on Twitter. So if you want to see me live, I'll be out there in a little bit. Peace out.